All right, all right, all right, all right, guys. We are live. Okay, live. So let's try and send to people. All right, all right, guys. Okay, we'll just forward the. And I'll just forward to. Okay, 1, 2, 3. All right. While I forward. So I welcome you guys. Welcome everybody. See you guys. If you've not subscribed to this YouTube channel, please just click on the subscribe button. So next time, assuming you subscribe, you'll be notified that okay, I am going live. Because trust me, these are some strategy you don't want to or we don't want to miss. And yeah, just got ourselves a new iPhone. Forex did it. It's charging itself. Let's unbox together. I've unboxed it well. Yeah. Okay. While waiting, I think we are just 2 3 that we're here. Okay, without wasting much of our time, because time is very low by my side, so as well. So all right, guys. So what I'll do now is we're talking about the market structure. This will be more like a 30 minutes class, guys. Like a 30 minutes class. So we're talking about the market structure. And one thing about this market structure is when we started this trading journey, when you started your trading journey, it feels as if it's one of the basic things, but it's not basic because it's basic, but at the same time, you just have to know it. Because if you don't know these things, you're actually going to find it very hard when you are get to the intermediate or advanced place. And sometimes you just wonder that okay, fine, one particular person using this strategy is not working for me, but it's working for the person. What's the issue? What's the problem? You understand? It's because there are some basic things now that you really have to know and you have to put it to use, no matter the where is this? Okay, so please let's continue. So Now, so the thing is, there are other basic things. For instance, now there are some particular. I already have a video to the market early morning around 8 o'clock Nigeria time. I say you want to actually be trading, for instance, USD cards. It's not advisable. Do you understand? I would say it's not advisable because USD, United States and Canada, like you know what I'm trying to say now. By 8 o'clock here, they are still sleeping. The banks are still sleeping there. So how do you want the market to move? How do you want strategies to work very well? You understand? So the pairs you'll be trading and the time you'll be trading them, I'll do a video about that. So today we'll be talking about market structure, like I said. And I said it's one of the basic things, but you just have to know it and you have to be trading in the right direction. So now, I believe if you are watching this video, you are not really a beginner, like newbie to the core. And if you're a newbie, you can actually come to my DM after this live. So you can share this so more people can join. So I want to share my, okay. I believe I can see my screen. So now this is the Euro USD we chopped yesterday, Friday. All right. So now we'll be talking about the market structure. You have to know your higher highs and your higher lows. The validation of uptrend is the creation of new higher highs and new higher lows. Why the validation of downtrend is the creation of lower low and new lower highs. So now, for instance, now I'll be using this BTC as an example. Yeah. Now, who is the boss here? If you really check our BTC, I dropped a video like few hours ago about this strategy and why I said it's actually going to sell. You understand? You can check after this class and now see TP1 eat here, hopefully TP2 eat as well. It's not easy. It's not easy. Actually, it's easy. So now, let's start. So for instance, now let me switch this to 4 hours. So now the first thing is when you actually come to when you come to the market, like when you come to the market and you're seeing a chart, just know that okay, fine, this chart is actually a graphical representation of what's happening in the market, and you should be able to read this chart. Are you getting me, guys? You should be able to read this chart. The meaning this chart is giving you just like you are reading a book. You know, you have to understand English, the English book. You have to understand English before you can understand what the book is all about. Now, exactly, this not different because this is a book, a BTC book, and we have to understand this language, which is the candlestick. Now, in what I'm seeing here now, clearly, we already know that BTC has always been a bluish move. Now, as you can see, it is a bluish market. So, uptrend markets, for those that don't understand what I mean by bluish. Now, and what did I say is the validation of an uptrend market? The creation of higher highs, new higher highs, and new higher low. That is, the new higher high must be higher than the previous higher high. So, for instance, now, let's say we are starting from here. Let us start from here. Now, I don't want you to guys to get confused. There's something we have internal structure and external structure. You understand? So don't get confused when we are talking about this market structure, please. So now I'll make sure I try my best to explain better. It's a little bit kind of confusing, but I'll make sure that I try very well. Now, the first thing you want to see is you want to come to a higher time frame. This is a 4 hour time frame, and you want to understand the market structure and pick out the market structures very well in the higher time frame before you look for what you want to do in the lower time frames. Now, so I'm starting from here. So if I'm starting from here, I'll make this as my higher high, HH. Let me make this my IIHH. Why is my keyboard? My mouse. Okay. Not actually open very well. Okay. I might just edit this. II. What's my- So I'll make this my II. and this will be my higher low because obviously this is lower than this. My lower low, higher high. This is a new higher high. As you can see, it's higher that's broken up. The thing now is when you want to draw a line, after picking your eye, you want to draw a line at the tip of the eye. I want to draw it like this, so as to be sure to know when the price will break that particular price. And for low as well, you do the same thing. There's already a line here. So now just to know if there's going to be a change in market structure. You understand? Now we have our higher high and our higher low. Then the next thing, the market came and broke this line. So now the fact that it broke this line and it created a new higher high. Now I'm going to draw the same line again. I'm just tracking the market movement. That's why I'm drawing the line. And this will help you. You have to draw it. Nothing like I know I can easily observe it. I can easily no. And now when the market came back, it retraced back, right? So this is a new higher high, this is a new lower low. So the validation of an uptrend is being what? Is being met, guys. So higher high, a new higher high, and this will be what? A new lower low. Now, as you can see again, the price of the market what? It broke this one using what? Creating this one. What we're gonna do again? We what? We draw the line, same line we'll be using seriously. We pick the line here. That was the high there. And the low, this was the low here. So let's draw. So in short, are you getting what I'm trying to say now? In short, the requirement of an uptrend is being met. Creation of new higher highs. As you see, we are creating new higher highs. The market is creating new higher highs and new what? It's supposed to be higher low. Sorry, guys. It should be higher low. Yeah, higher low. Sorry, guys. My bad, guys. Higher low. Higher low. Higher low. So now, guys, we want to pay very careful attention here. We want to be very, very careful now. Now, and the strategy I'm going to use now, we'll try it for every other creation of a market too. Now, the first law is the trend is your friend. You understand? So always trade the trend. You understand? Now, the thing now is we are normally we're supposed to be looking for an opportunity to buy. But I can't wait for months because I want to buy Bitcoin. So at least I can still sell. I don't know if you get what I'm trying to say. So that's why I'm actually selling. So I actually make sure that other conditions are being met before I can say, okay, fine, let me just sell this market. You understand? I had to wait for like, can you see this consolidation? I had to wait for like say days. So now, the first thing I want to do now is I want to sell this market. Just like how it has been happening. Yeah. After every new higher high, okay, now you can see that obviously this is a new higher high. The market just created a new higher high here. A new higher high. So the next thing is the market wants to create a what? A higher low. Because for every market that's creating a higher low, it will create a what? A higher for every market creating a higher high, it will create a what? Higher low. It's created a higher high, higher low, higher high, higher low. Now that it just created the higher high here around this place here, let me zoom out. So definitely it's coming to create a what? Higher low. But where am I going to know the particular place the higher low is going to reach? That's the question. Now that's where the Fibonacci retracement comes in. So now I said this Fibonacci strategy and market structure is actually kind of different from the ones you know. Fine, I know your previous mentor taught you about the golden ratios, that's 1.8, 50%, 61.8%. Yeah, that's good, that's fine, it works well. But now me, I'll explain the psychology behind all this golden ratio. You understand? Now, Fibonacci retracement was actually like that theorem was actually provided by a man. I think his name is Fibo, Mr. Fibo. You understand? So now this mathematical instrument, because actually a mathematical instrument, was used based on geometric and what's the name of this thing? Sequences, geometric sequences, and yeah, geometric sequences. That is which more is like, for instance, repetitions. You understand? Repetitions of number. So they are using it now for repetition of price, repetition of patterns of price. I don't know if you are getting me. So that's more like the psychology of that Fibo. So now let's use this Fibo. So now the thing now is fine. Those golden ratios or those good numbers are okay, but I personally I don't basically base on the golden numbers. You understand? I use my Fibo to know my discounted price and my premium price. So what I mean by discounted price is now the fact that the price of the market is going up and it's coming down now. Okay, if you are anticipating to buy this Bitcoin now, perhaps you don't want to sell, you're anticipating to buy the Bitcoin because you don't actually have a Bitcoin. We are just looking for a time to buy so that it will pump and you cash out your money. You understand what I'm trying to say? Now, trust me, you want to buy at the right price. You don't want to buy at a lower price that at a premium price that you might buy now and you can just see that in the next 7 days it's still dumping. You have to wait for how many months before it's right. You want to buy at the price that okay, fine. Highest within a week, your money is already pumping. You understand? So now in this kind of thing, that's when you actually have to buy at a discounted price. And how are we going to know we are buying a market at a discounted price? Like I said, that's where my Fibonacci is going to come in. So now I'm starting from here so that we can test this together, guys. So now this is my higher high and higher low. So if the market is in an uptrend and you want to use your Fibo, first you have to do is you drag it from your swing low, which is your higher low, to your higher high. You understand? So know the particular place is going to retrace to. So now we'll see now where this particular one retraced to. Maybe it was at a discounted price or the premium price. You see what I'm talking about, guys. So now I drag this now to my higher. Okay. Okay. Now after dragging this now, as you can see, guys. Now 50%. The 50% is what I will use to divide the premium price and the discounted price. Now, all I want to do now is I want to point out my 50%. This is my 50% on Fibonacci retracement. So to my 50% to 100 is what is a safe place for me to buy the market. My 50% to one, I be zero. I'm still buying that market at a premium price, which is not advisable. Because one thing about trading is patient pace. You just have to just have to be patient. You can't predict this market because you are not doing of the market. You are not even the top. You understand what I'm saying? So like the easiest thing and how we eat this market is that we look at how these big people are trading. And obviously we are trying to just like follow their footstep. And when we see the footstep of maybe a particular big trader placing a trade, we want to add our order with his own so that his own will be moving and we will be climbing the little with little profit. And I'm saying little profit, I'm not talking about $50. $50 is a little profit. I'm still talking about $20,000 is still a little profit compared to those people that are actually moving the market. So let me continue. So now these actually didn't fall around the 50. So this is just like a minor break of structure normally. But the fast standard now we won't take that signal normally. We won't, but we'll still have peace of mind. Because if we would have taken it now and it came the otherwise, we would have been liquidated. You understand? So more advisable is that what I would do basically is now I will now look at I will now come to my 50 to 100. I want to focus at my point of interest. I mean point of interest is like the interesting place the market might want to come. I will check out for anybody's other block that can be forked or let me say anybody, I'll look for an other block that can be forked with and using my fair value gaps like this imbalance in the market. So now, normally there are a lot of imbalance in this below this 50 to 100 in the box of 50 to 100 discounted price. But normally, normally it's always advisable to go for the last one, because the law of this imbalance is just that the market will come back to come and fill it later. You understand? So if they are using this one, it might want to come here before it start changing direction. That doesn't mean it has broken the law. It has not broken the law. The law says that it will come back to that other block and or other block or fill the market. It's going to fill the market and it has to fill the one on that too. So if you use the one that is up to change sometimes and it's come time and get liquidated. So you just have to like wait. It's not every time this thing will work with your setup. You understand? But at the end of the day, you are saving your money. Your money is still there. And when it comes to your setup, you are being profitable. So that's just the skill. So now let's use the same figure again on another. So now this is our swing low, our higher low, and our higher high. So we want to place a particular trade where the market is trading now, where we'll place our buy. So now this is swing low. I'm taking the swing low. Okay, see the swing low, the higher low here. I'm taking it from the higher low to my higher high, which is here. Okay, let me delete this one. So I'm getting here. So I'm getting here now. I'm getting here now. What did I say we're going to do? Let's look for the Fibo, the area of concentration. Like now, okay, fine. I want to make it visible. Okay, cool. Now, as you can see now, guys, where's our 50? This is our 50 here. This is our 50. And now below our 50, guys, there's another block here. There's another block here. So exactly what I was explaining the other time. So now you see that the price of the market when it came here, it only reacted and bought for a little period of time. You understand what I'm trying to say? And later came to the last one, which was here. Can you see? Before it spiked up. Now imagine we bought here. Do you know how much we would have made? Because this was around 69 something. I just said 67, 66,000. And it came to create a new all-time high at 77,000. Do you know how much you would have made? Thousands of money. Do you understand? So now, I'm very happy with it that this strategy is working. So now, we came for the last one. Now, okay, fine. If you don't understand, let me explain what a fair value gap means and what an order block means. So now, the thing now is order block is in short is let me say a general word, or don't let me say the general word. We identify order blocks by strong movement, in sense that these are particular area where investor, you understand, puts in a lot of money, or let me say the central banks, or let me just use the word generally for them, big boys. When the big boys put a lot of money just to what? Push the market. So if something is trying to come down normally, and and somebody put a lot of money to boost the thing up, you understand? At least there will be a sign that okay, this thing was cracking before. I don't know if this thing is cracking before, but somebody puts the money before it went up. The sign will still be there. And this person that puts the money there too, he not put the money there for play. He put the money there so as to make profits. So eventually, when the person makes his profits, he's going to do what? Take his money, and what comes up is what comes down. But the interesting thing about this thing is when a particular big boy, I call them big boys, which means there are a lot of big boys inside the big boys. When a particular big boy plays that particular money to boost a particular pair, and it was boosting, another big boy will see that this thing is moving. Another big boy will place his own money too. So the more they are placing their money, you understand, the more the thing will be boosting. But immediately one person starts taking away the money, when they see that the market is dropping, others will be taking away their money with the little profit they are seeing. You understand? And sometimes some people might actually add more money just to make it boost again. Do you understand? So that's how this thing works. So you see that we don't even know who the big boys is. We don't know when they're going to do. That's what I'm saying. This market, just know that if you really want to make this market, you can't be the boss of the market. You just have to know how these people trade, when they are trading, when they are placing order, where their order is, so as to make it. Now, where their order is what we call that order block. You understand? The particular price where the market was before there was an expansion or displacement move. That is a very strong move like this. You understand? So now, in most cases, for this particular bluish powerful move, the other block is always the what will I say it, the last opposite candle. I'm trying to make things easier here. So in this particular case now, this red will be my order block. This red candlestick will be my order block. In this case now, you can see a powerful move as well. In this case now, this green will be my order block. This green candlestick will be my order block. In this particular case now, will be my order block. So are you getting me, guys? So this will be my order block. So that's how to know an order blocks. And these are the things we'll be looking at. You understand? At the Fibo ratio of 50 to 100. You understand? So as we are going to know, we're going to take TP, because we can use it to know where we're going to take TP. Because if I'm selling, I shall know that okay, this is when it gets to that 50 to 100, it's going to stop selling. So I can use it to take my TP if I start selling from here. Do you understand? And at the same time, I want to buy. I know that okay, fine, it's buying at that particular zone, 50 to 100. Looking for a particular place to buy. You understand? So now, what we're actually going to focus now on is where to buy at 50 to 100, or and where to take our profits, because we're already selling. I dropped the selling signal. So now the thing we want to do now is we want to draw our Fibo again here, just like how we did it here and it's worked. Definitely it's going to work here as well. So now we take the same swing low, the same higher low, and drag it to the new higher high that was being created by the market, which is here. You understand? Now after dragging it, this was our 50. So which means anything we want to deal about is 50 to 1 here. Now, God's so good. Now, see, we have another block head here. And same time, we have another other block here. So which one do you think the market is actually going to come in for? Like I said, it's advisable to always use the last one. So I'll say we wait for the market to come to this particular price, 68 112, before we buy Bitcoin. Now, mind you, in some cases, it might use this one. I might not touch this one, because not all everybody on that block can be fucked. You understand what I'm trying to say? It might be this one. But how you are going to know, we'll actually discuss that in the next class tomorrow. As I said, we are taking this step by step. So first thing I want you to do is like take up your phone, take up your charts, understand how higher highs and higher lows are being formed. Now I was talking about external and internal market structure the other time. Now what I mean by external is that these big ones, these big moves we are seeing, you understand, they are the external market structure. The internal one are this small one, because now obviously this movement from here to here was supposed to be like this. You understand? It was supposed to move like this, straight up like this. You understand? But the market moving an irregular pattern. That's why it's moving like this. So obviously in this particular place too, there's higher high from here to here now. From here to here now, there's an internal uptrend. I don't know if you're getting me. Normally the whole graph is an external uptrend, but here like this, from here to here is an internal uptrend. From here to here, internal downtrend. From here to here, internal uptrend. From here to here, internal downtrend. From here to here, internal uptrend. From here to here. I'm expressing a what internal downtrend here to create a what, a new higher low. Are you getting me, guys? So in this internal uptrend now, we have break of market structure, which is we have higher low, higher internal higher high, internal higher low, internal higher high, internal higher low, internal higher high, internal high. You understand? But they don't really matter. So, but the main reason why I'm saying you have to like make sure is that this thing sometimes can actually confuse you. It can confuse you a lot. Because imagine you calling this particular one your higher high. You eventually have issues when you're analyzing. You understand? So that's why it's advisable that look at the bigger picture first to check your real external market structures, so as to know the particular trend. So you're not analyzing rubbish. Now I'm not guaranteeing that when you start this thing, like spotting it, it's going to be like very, very easy. But what they say, practice make perfect. When I tried it as well, even despite the fact that I was a bit good then, I was still having issue. Even up to now, so if you're having issue, yes, you are supposed to have the issue. You're not supposed to give up. The more you try to identify, the more you understand it better. Are you getting me, guys? So now, the thing now is we started selling, right? So yeah, okay. So what did I do? Another thing you have to consider is that you don't just start selling market because you think that it's creating a new higher high. Because now, what warrants me to start selling this market? What if it was not even ready for this was not the higher high and it was still going to go up? Now that was why I came to my lower time frame. Like I said, I already used my higher time frame to pick the external market structure. Do you understand? So I came to my lower time frame to know if it is ready. And that's why I came in with my idea of price action. So that's what I'm saying. Everybody's saying that price action works better than ICT. I said no, you guys are missing it wrong. Everything is the same thing. The combination of the two, then you are good to your psychology trading method. Because if you don't know the two, then why are you trading? Because obviously they will tell you, those ICT traders will tell you, if you say the ICT trader tell you that ICT is just going against price action, is a lie. I think I'm going against price action. Price action is all about supply and demand, and the market is all about supply and demand. ICT generally is all about liquidation. You understand? Price action is the law. ICT is the manipulation. You understand? Before you can break the law, you have to know what? You have to know the law. As simple. You don't need to make this thing hard. And now when I'm talking about the ICT, there are just few things you just have to know. You don't have to know all those concepts, blah 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 blah. I just have to know you just know that other block. Know the fair value gaps, your daily high, your daily low. That's all, guys. Like that's basically all. And yeah, I take one-on-one mentorship. If you want one-on-one mentorship, I don't do groups. If you want one-on-one mentorship, you can actually click on the link in my bio to get across to me on WhatsApp. Then we'll talk about the prices. Understand? So now let's continue. So what I did was like I saw this particular thing was moving in a what? In a rising wedge. This chart pattern, price action. And now price action will always tell you that when there's a break below, what will happen? When there's a break, it means that price market wants to continue in that direction for some time. So can you see down? That's why I'm thinking. I said okay, fine. The Bitcoin is ready to sell because it broke it bearishly. I haven't dropped the signal to the sell stop. That is, anytime it's ready to break it, you shall break it and hit my order and start selling. You understand? Now, another thing that will make us sure now that market is selling again now is just as how our external market structure is valid, the laws guiding it. I've not explained that. It's the same law that is guiding the internal market structure. Because now these are our external, but now these little ones are our internal structure because they are just the way to the higher eye. They are the movement to the higher eye. So they are our internal structure, you understand? So now which scale or this is a new higher, this is a internal, okay, let me call this IHH, internal higher eye. Let me call this IHL, internal higher low. IHH, a new IHH, a new IHL, a new IHH, a new IHL. This thing now, that's how like when you see people giving this thing terms, it's not about the terms, just about the understanding. I don't think I've seen somebody giving this thing IHL, IHH. I can come out and call this my strategy tomorrow and be like, hey, this guy is great. This guy. No, it's just about the understanding what you are doing. So now, let's call it, because we named it together. So let's call this the new IHH. Now, what we want to do now is this was our last, like this is another confirmation for us to know that okay, fine, the market is moving. Okay, so we want to trade the internal now. In the external, we've seen the bigger picture in the external market structure. I want to sell. So someone like me that I'm just jumping in inside this market, I want to look for a better way towards a better way to join the sale because I missed the first, like I said, touch TP1, TP2. You understand? This was my TP3. So I'm looking for a better way to join this market now. So the first thing I want to do now is I already know my new IRI. This was my new IRI. This was my IR low, last IR low. You understand? So now this was just trying to tell me that, okay, let me draw this line. So you can see it's not like I'm making a mistake, but like you understand better when you're drawing those lines. My internal let me call this internal HH. Can call these ones, even though they are equal lows, we still at least they are still lows. IHL, IHL. So now there's something that will make us know if the price of the market is ready to go bearishly. You understand? Or bluishly. Now, it's just about the validation. I was saying when I started, I said, what's the validation of an uptrend? It's the creation of new higher high and new higher low. Of a downtrend, the creation of new lower lows and lower high. So now, does that it means that the validation of an uptrend can change if there's no creation of a new higher high and higher low. You understand? So it means that what that law simply says is that for this, if this is a new higher high, this will be a higher low. If it creates a new higher high here, it creates a new higher low here. The higher low that is creating here must not be lower. You understand? Than the previous higher low. It must always be higher than the previous higher low. Are you getting me? That's why they call it an uptrend. And the new higher high form must always be higher than the previous higher high. So in the sense that when these things are changing, that is, now this was the last higher low. This was the last higher high. Fine, this was greater than the previous one. This was greater than the previous one. This was the previous one. Now, but in this sense, now this thing is coming down. Now coming towards this previous higher low. If anything should happen by chance and it breaks this higher low downward, obviously it's coming down. Don't forget what I said. See this powerful movement. See other block here. So definitely it's coming to this particular place. You understand what I've told you now? So when it comes here, so when this kind of thing happen, you've seen that it has broken, it has gone lower. The new higher low has gone lower than the previous one, which means that law has been broken, which means that higher tendency, the validation of it being an uptrend has been broken. You know, it's two laws. The first law says that the creation of higher highs and higher lows. That is, the higher high must be greater than the previous higher high, and the higher low must be higher than the previous higher low. But in this sense, now what has been broken, which is the new higher high is now lower than the previous higher low. The new higher low, yeah, is now lower than the previous higher low. This is the new one that is just created this year. Is now lower than this one, which was not supposed to be so. It was supposed to come around to this particular place, then start going. I don't know if you understand what I'm saying. But now in this case now, when something like this happen, is of two things. Is either this is just liquidation or the change of the there wants to be a change in what's this thing called? A reversal or retracement. You understand? So normally I will take this to be my last TP because the market will surely after this now. It will want to like create a new what do you call it? It will want to create a new like after this it want to create a new what is it? New, the variation of a downtrend is the creation of the creation of lower low, lower high. So now the fact that I created a lower low. You understand? You can't even call it a lower low yet. You understand? You can just call it after if this kind of thing happen and it breaks it, you can just call it. Sorry about the break in transmission, guys. So normally, what happens is that when this kind of thing breaks, you call it change in market structure. Some people call it CHOCH, couch, change of character. For me, I call it change in market structure or market structure shift. Like I said, it's not about the name, it's all about understanding. So, and the main meaning is that there are things that there wants to be a change in direction. So, when this kind of thing happen, the price will come and touch, look for area of a point of interest, which is always order block fair value gap. The closer order block and fair value gap, then always use it to go up. Now, the up that this market is going is of two things. You might decide to use this up to create a new higher high. You understand? And it might use this up that is going to what, to create a new lower high. Don't get it twisted. If it's creating a new lower high, it means that it wants to continue in a what? In a downtrend. You understand? But if it goes and create a new higher high, it means that it just came to liquidate people around there and it's going to buy for some time. Are you getting me? But the common thing is that it's sharp going up, and you will make the up that is going from this particular place to a very close point of interest again. You look for another point of interest where there's a, for instance, maybe it came aggressively down, then obviously there will be a point of interest around this particular place. Then you take your TP and close the market around that particular point of place, period of time, and observe it. Maybe it will break that your point of, if it's break that your point of interest, it means it's going up. But if it's reacting around that your point of interest, it means it wants to use it to create a what? A higher low. Sorry, a lower high. And if it creates a lower high, it will break the previous low, making this what? A new, making this what? A lower low. And making this one what? A new lower low. Then it will go up. But okay, the fact that this one is coming down, it's coming down to look for another point of interest that will push it up again. And look for another point of interest, maybe I look up or another block around this particular movement is made to create another lower high, then come back again, break this last lower, what's it called? Lower low. Look for another point of interest to what, to create. You understand? So like that, like that, like that, like that, until it wants to change again. So the same thing applicable. If it wants to change again, this is what's going to happen again. It's come up. When it's come up, it comes like this. Guys, now it has broken. If it comes like this, it means that it has broken the previous higher, the previous lower high. So in that case, the lower high was supposed to be lower than the previous. This lower high that it wants to create was supposed to be lower than the previous lower high. But in that case, it came above it. It means that the law of the downtrend is shaking. So after that, it will look for another. Obviously, the same thing we did here. To look for a POI that will push it down to create a what? To create a lower, to create a what? Higher, higher low. Then it breaks this to create a new higher high. So that's how the trend just changed. You understand what I'm saying? So with these things now, you just use your what's this called Fibo to know where to trace to before you join the sale and stuff like that. Do you understand? So please let me entertain questions. Let me entertain questions. What's that? I'm coming. So That's that about that. See, the absence of no question, I believe every one of us understand. I can't even trying to I can see myself. Why do you guys keep on saying is that? Okay, it will be live, it will be recorded. So I can see myself. Why do you keep on saying is that? So all right, guys. So that's that about that. So the first thing I'm actually going to give you is like just know your what's it called? Know your trend, know your high and higher low, lower high and lower low, know when it is breaking, that is there's going to be market shifts. Practice, yeah, practice. It works like mad. If you use the strategy and I can't get blown, come on, message me, I will fund you. Not like I have money, but I'm not sure if I can't get blown. That's pay if you use a good risk management in you. I know that because I said I can have go and be staking like 90% of your. It's another thing for you to know these skills of analyzing, another skills for you to know your risk management. There are two different kinds of stuff. Forex is wide, they say. They're not trying to tell you that the knowledge of the skills is no. The different thing when you know how to analyze, a different thing when you know how to play straight, a different thing you overcome your emotions, a very different thing. Ah, God, it's wide, they say, and it is true. So, thank you very much, everyone. In the absence of no question, I'll call it a night. Thank you, guys, and God bless. So, click the subscribe button.